Hi there, welcome to Kneppy Invest and welcome to an absolute bloodbath on the ASX today, August the 5th, 2024. We have about 1 hour left of trading, and I thought maybe there could have been a bounce, but we haven't seen a bounce. In fact, the market has fallen all through the day, down by over 3%. In fact, tech is down 5.61%. I think what's happening today is because of the bad news in the United States last week on the Thursday and Friday. I think there's a little bit of, I wouldn't say panicking in the markets today, but I think definitely fear has increased. Fear that possibly we're moving towards a bear market or a recession or anything like that. And fear is much more powerful than greed. And that's probably explains why you get a lot of these really big down days, but you don't get those really big up days. So if you get the market up 2% in a day, that's a really good day. But on occasion, you will see the equity markets down by 4 or 5% in a day. Now, in saying that, this is the worst day in over 2 years. I think it was like June 14, 2022. Was the last time we saw a big down day like this. Or maybe June 14 was the low in June 2022. Maybe the bad day was a few days before. But that most previous, last time we had a day like this was near the bottom in June 2022. So one of the worst things you can do on a day like this is panic, sell out of all your positions because you think the market is going to go down and that's the bottom. And then the market rallies after that. Could that happen now? Don't know, but it could. One way you can play days like this is just to decrease your risk, sell out of maybe not all of your positions, but sell some, increase your cash just in case. So you de-risk. Now, I haven't done that because I actually do expect a bounce the next few days. I think very important what's going to happen on the American markets tonight. And if we do see a bounce, that's when I will de-risk, not now. I don't like selling on these sort of days because I always expect a bounce. And sometimes you'll see the bounce at the end of the day. So the end of the day could be fairly important today. Okay, so what's the agenda for today's video? We'll go through the best and worst performing companies, indices, and sectors. Yes, some companies have performed okay or quite well today. Not every single company is down by 10%. Some companies are down by 10%, and we'll see that when we go through the worst performing companies today. And there is a common theme among the worst performing companies of the day. And I'll talk about that theme when we have a look at it. It's not a sector or anything like that. It's just there's a theme there. And then we'll have a look at some charts, maybe. I have one chart to talk about. That's Resmed. Yes, I do want to talk about Resmed, and I might have a look at Ethereum chart as well. And I do have a top 5 stocks of the day, and a few companies that did not make it into the top 5. Number 1 is a company whose share price was up 15% today. Yes, this company released an announcement today. The market liked it. Share price up 15%. Another company whose share price is up 3 or 4%. So another company, I think share price might be up about 8, 9%. So on days like this, we still see flow of good news that can help a company miss this really bad day. Okay, so let's get stuck into it. No tweets or anything like that. Don't really need it. So let's have a look at the worst. Well, not the worst. Let's have a look at the indices and sectors. I'm curious. Do you think anything is up among the sectors, indices, and ASX 20? I'm assuming no. I'm assuming everything's down. The only one I might think could be up is gold. Let's have a look. Gold, there's no collapse in gold. Gold's holding on strong. So this means, and Bitcoin's down a fair bit, by the way. Oh, it's collapsed, Bitcoin. Oh, it's fallen through support. So gold is interesting. So it's really holding up really well compared to cryptocurrency. And if we have seen a fair bit of selling in gold, that could be an opportunity. That could be sort of also really holds up the argument that there's just panic selling today, that people are just selling whatever they have and they're not, it's just random, selling random stuff. So if we do see gold sector down today, that could be a sign there is a bit of an over panic. The market is just panicking a little bit too much. So it's going to be interesting to see if the gold sector is down today. Anything up in the ASX 20? I doubt it. Maybe one company might be up. Highly doubt 2 companies up. So either 0 or 1 company is up. So let's have a look at the sectors indices. So all sectors are down. In fact, the best performing sector is healthcare down 1.65%. That's not surprising because I would consider healthcare to be a little bit, excuse me, healthcare to be a little bit more defensive than other sectors, including IT. According to this, IT is only down. Did I say only down? IT is down 6.34%. So again, I think there's a bit of fear selling today, a bit of overreaction, selling on market. I think a lot of people are doing that today. Selling on market, they just have to get out, and there's just not enough buyers to cover that fear. That's exactly what happens today, and that really showcases how fear is such a much more powerful emotion than greed. And gold, down 1.87% today. I'm a little bit surprised by that. So gold companies are down big, yet gold prices have not nudged, not moved. So again, that really reinforces my thinking that there is just panic selling today. People are just selling whatever they have and not really looking at the company. Just selling, I've got to sell this company, got to sell this gold company, even though gold is not down. I'm panicking. Okay, let's get to the ASX 20, down 3.35%. Is one company up within this index? I'm going to say no. I'm going to say every single company's down. And I'm wrong. One company is up. What company could be up today in the ASX 20? Might be iron ore. One of the iron ore companies, or yeah, let's have a look. Well, now it's down. Pretty sure that was 19. That was one. Did I make things up or did I see things? Okay. So maybe I was right. Maybe it just changed. I have no idea. But anyway, Rio Tinto down by 0.01%. So it might have been up like a minute ago. But everything is down as we speak. And a few companies down a fair bit. WiseTech, profit taking, again, selling on market, down 7.58%. And there is a theme. So WiseTech is a tech company. Goodman Group has rallied really hard over the past month. So I'd say that's a lot of profit taking there. Even QBE Insurance has been a beautiful uptrend. Macquarie Group has run hard over the last few months, down 5%. Aristocrat, exactly the same. Commonwealth Bank, down 4.4%. Significantly overvalued, and the chart had looked really good. So again, I think this is a lot of profit taking. And if you look at the companies that have not performed as badly, you can't say the same thing. Although CSL, that is healthcare, CSL has been on a run, but not a significant run. Okay, so no big surprises when we look at the best and worst performing companies in the ASX 20. What about the best and worst performing companies on the ASX? We'll start with the top gainers. East 33, this is by percentage change. East 33, there is a takeover bid for that company. That's an oyster company. Yes, there is an oyster company on the ASX, up 75% on the takeover bid. Terragon Holdings, Metalhawk did release a mining announcement, up 50.94%. Keely Resources released a mining announcement as well, up 23.66%. I'm tending and wanting not to include those sort of companies in the top 5 stocks of the day for various reasons. So neither of those companies are in the top 5, but we'll have a look at the chart for both. MHK, where's my what do you call it? Keyboard. MHK. MHK, no interest in this. No interest in that. But I have been interested in Keely, but it's just way too volatile, this share price of this company. And even today, although when the share price got below 10 cents on Wednesday, 24th of July, you can see the share price just going sideways for about 6 trading days. That's telling me that the selling has come to an end. And then today, we've seen a lot of buying, but we have also seen a fair bit of selling. Share price got as high as 13 cents, and that selling is understandable. When you look at the share price, or where the share price was in the past month, the share price has been as high as 17.5 cents. So there is a fair few of those shareholders saw the share price rallying today on a pretty bad day and went, now's the opportunity to take either profits or a smaller loss with this company. So that's probably why there's been a little bit of pressure on the share price today. And to be honest, the volume has been uninspiring. Okay, so none of those companies made it into my top 5. Anything else here? Company number 1, top stock of the day, Spirit Technology, up 13.46%. Not a lot of turnover, $100,000 worth of shares traded today, but the chart for that company is starting to look better. So I'll talk about Spirit Technology towards the end of the video because it is the top stock of the day. So I can totally understand why it's up 13.46%. Otherwise, most of the companies here fairly small, and a lot of these companies are trading on really low turnover. One company here, Metal Bank, is up 11% on $108 shares. I don't know why anyone's buying, but someone's bought $108 worth of shares in that company. Now let's have a look by market cap. Any interesting things here? Resmed. I did a tweet on Resmed. I'll show you my tweet. Why not? I think I showed it in yesterday's video, so I won't show it. So Resmed released their quarterly results. Was it last Friday? And for some reason, Australians didn't like it. Share price was down like 1 or 2%. And then when the market opened in America, share price rallied. Share price in the United States for Resmed, I think, rallied between 4 and 5%. And I was just mentioning on Twitter, be better, Australia. Why has the share price of Resmed rallied in America, but not in Australia, when the results were really good? So the whole reason why Resmed share price up today is because how the Americans reacted to their quarterly results. And to be honest with you, the Australians should have reacted better. PYC Therapeutics up 8.25%. They did release an announcement today. I decided to have a look at this company. It has come in my top 5 stocks of the day. So happy that company is there. And you notice there's a lot of ETFs. Strong Bear ETF, BBOS is in here as well. Another one called GGov, BetaShares US Treasury Bond 20 plus year. I'm going to have another look at the bonds. May not have changed as much, but yeah, there's a bit of a signal there. Viva Energy, there you go. Viva Energy up 3.85%. Another company in my top 5 stocks of the day. They did release a trading update. So I think on days like this, if you have a really good trading update, release it. You might stop the pain. And VanEck, China New Economy ETF's up as well. Maybe China's having a good day. Maybe in the Olympics, I don't know. Okay, so let's have a look at the worst performing companies. And I actually did have a look at this before I started recording, and I didn't really gain anything from it. DXN is down 22%. That's just profit taking, fear driven, not a lot of turnover. So you're going to see a lot of these companies down a fair bit. And one of the reasons why is because a lot of these companies' share price have risen a lot over the past 3 to 6 months, and a lot of profit taking, a lot of selling on market. And this is or can lead into an opportunity to buy these companies at lower valuations if you think the market is overreacting, and if you think there's going to be this could be the end of this little down section, this little correction in the market. Curve Beam down 23.4%. I do like this company. They did a capital raising. That's why the share price is down. Probably, I can't remember what the capital raising was done at. Let's have a look. CVBM. Let's have a look. So 18 cents and which one? The 1st of August, there was an announcement then. And what is capital raising price? Is this another over? That's 18 cents. Okay, so I can understand that. Just going to have a look at DXN. Could be down even more because don't forget, what's this called? Market index is 20 minutes delayed. And I'd say, in fact, the share price of this company opened at 7.7 cents and now 6 cents. So most of the drop in the share price is after open. So this is just people dumping on market, getting really upset. If you have a look at a chart for DXN, this could be, it could be a little bit dicey, is it? Yeah. It looked dicey on the 29th of July. Then the company released their Appendix 4C. The company's operating cash flow and free cash flow positive. So this is just, I think, people taking profits, becoming a little bit more fear-driven, that sort of thing. Not massive volume either today. So again, I just think this sort of selling is just fear-driven. There's no reasons behind it. It's just fear, lots and lots of fear. And you're going to see a lot of these companies, particularly when we look at the top losers by market cap. And other companies in here, FBR have done a capital raising. BetaShares Crypto Innovators ETF, whatever. Metro Mining, that's another one. The share price has rallied hard over the past 6 months. So let's have a look at the chart for this one. It's what is it? It's a bauxite miner just north of Weipa. Share price has rallied really nicely and it's just panicking, down 3.8 cents. Share price was dipping before this, but again, there's no rhyme or reason behind this. It's just panicking, people panicking and selling. Okay, so let's have a look by market cap. And we're going to see a lot of companies whose share price is down by over 10%. And you'll notice there is a theme. Well, actually, there's not as much of a theme now. Actually, that's by smallest market cap. Let's have a look by biggest market cap. Block rallied hard end of last week because they released their results and the market liked it. Clarity Pharmaceuticals, share price of that company has rallied a lot over the past, we'll say maybe year. People taking profits. WA1 Resources, same thing. Chart looks really good, profit taking. Botanics, same thing. I think some of these are very similar, like EBR Systems, Race Oncology, there's Metro Mining, Findy definitely fits in that. Can't say the same thing about Frontier Digital Ventures. Share price looked ugly before today. Appen, share price rallied really hard at the end of last week. So again, profit taking. So there is a theme among these worst performing companies today. Beta Shares Japan ETF currency hedge. That's interesting. What's happening with Japan? Maybe they're bit down huge today as well. Maybe that's the reason why we're down big, is because of what's happening in Japan. Let's have a look, because their market is open. Where is it? Oh, gee, Nikkei is, look at the Nikkei. What's happening in Japan? Down 9%. Okay, that could be one of the reasons why. And this is just an absolute collapse. Now, this is the Nikkei 225. In my other watch list, I have the other Nikkei, which is just the plain Nikkei. I thought I did. Yeah, Japan 225. And this is down 8.91%. What's happening with the Nikkei? Let's have a look. So thank you whoever did that. Japan's Nikkei down 8%, wipes out the gains for the year. Nikkei plunges nearly 7% as global sell-offs resume. There's nothing in there that's trying to explain what's happened. You're just saying it's plunging. Don't want that. I think it's just, they're just talking about US. Maybe this is like I don't know, maybe something to do with the currency as well. No idea. I should have gone through Twitter, but this chart looks ugly, but I'd say this is significantly oversold, and this is the sort of situation I'd expect a significant bounce. Sort of reminds me, if you go back to COVID-19, I don't know if it's happened with Japan. It's actually worse than COVID-19. Look at it. This is COVID-19. Even during COVID-19, that month between February 23, March 23, we had some really good days in that. So this is one of the, this is one of the worst looking 3-day periods I've ever seen in any market. That's just horrendous. That's the drop here for the Nikkei from its high. Let's have a look. Let's measure it. How do we measure it? There's some sort of, here it is, price range. So the Nikkei right now is down 25.61%. That's in less than, what's that? Less than 10th of July. So less than 1 month, the Nikkei is down 25%. Yes, 25% in less than 1 month. What's happening there? So it was looking really bullish, then right now it's looking horrendous. Okay, so that's the Nikkei. And that really explains why the Beta Shares Japan ETF currency hedge is down a lot. That was a bit of a surprise. I did not really know that. Now I do. And I think that is, well, that's a perfect explanation why our market is down by way more than I thought it was going to be down. I thought maybe 1.5 to 2% at worst. I thought 2% at worst, not down 3.5%. So yeah, I can understand why Australians are now running for, well, I don't understand why Australians are running for the hills. I think this is a little bit of panic selling. I still think that, but definitely understand why there's a little bit more bearishness in the market today based off what's happening in Japan and Nikkei. Anyway, let's go back to, actually, let's start off with the top 5 stocks of the day. Yes, top 5 stocks of the day. Coming in at number 5 is a company that released the results. I expected more results being released today. I only saw one. Now, maybe a few have released their results after open. So just like every day, I usually go away from my computer about 10 a.m. So sometimes I won't see any announcements released after 10 a.m. And sometimes before I record or start recording the video, I will have a look. Today is not one of those days. I did not have a look. And we'll go back to the last announcement I looked at, which was, the last one was X2M Connect. Didn't actually open up that announcement, but everything after that didn't see. So for instance, PYC Therapeutics actually released an amended update from their announcement. So I didn't look at that. And Northern Star released an investor presentation. There's a couple of companies released their appendix for a reason. No, one company called Protean Energy, but we don't need to look at that. Trust me, we don't need to look at that. A bit of a merger between Deckmill and McMahon, or a takeover there. And Numi, ASIC proceedings update. So nothing much in the announcements after 10 a.m. Australian Gold and Copper did do an exploration update. Share price down 16.52%, but that could be just sort of a byproduct of the overall market being down a lot today. Okay, so let's go back to the top 5 announcements of the day. And the only company to release their announcements, interesting company to release their announcements, was Argo Investments. Why? I don't understand why other companies did not release the announcement today. So down 1.8%. This is an investment or a fund manager. I think I might have talked about this company in the past. I'm just going to open up this, and I'm going to open up the media release. And unfortunately, nothing much to see here. And the reason I say that is if you look at their investment update for June, and you have a look at so NTA per share is 961. NTA per share after unrealized tax provision is 836. That's the most important price. It's not 961 NTA per share. It's after unrealized tax provision, because they do have to pay capital tax or capital gains tax on any position that's risen a lot. So you have to take into account tax. So 836. So what's the share price? 881. And just have a look at some companies they own. It's just like a ASX 20 list. Macquarie Group, BHP, CSL, CBA, Wesfarmers, Rio Tinto, Westpac, ANZ, Santos, Aristocrat. It's just the top 20 companies. It's like an ETF. Why would you buy this fund instead of an ETF? Just buy an ETF. That's my thinking. Yeah, I don't understand why these sort of funds are either relevant into today's investing society or investing climate, because they are largely irrelevant. They just buy or have the ASX 20 or the bigger companies in their funds, and they're not going to significantly outperform the market. They're just going to get average returns. So just buy ETFs because you pay less fees. I don't understand why people would buy stuff like this. That's just me. And the results. Meh. Profit down a little bit. Earnings per share down a little bit. How can it be down a little bit when the overall market's up? I don't understand that. And there's a reason behind that. Final dividend per share, the same. LIC capital gain component, 3 cents. Full year dividends per share, the same. Now, they did mention, and this is maybe one of the reasons why, despite increased income from special dividends, profit declined as overall investment income received from companies in the investment portfolio was lower. Most notably, dividends paid by BHP, Rio Tinto, and Woodside were down significantly, reflecting softer commodity prices. So that's why this particular fund manager has underperformed, or has, done worse than last year, when most fund managers should have done better, because they've invested highly into these big companies these big mining companies that have seen their dividends decrease. So my whole thinking when it comes to companies like this, Argo Investments, is why? Why would you invest in a company like this when you could just put your money into an ETF, pay lower fees, because you get the same sort of returns? Just look at the companies they're invested in. It's the ASX 20 or the ASX 50 or whatever. Anyway, so that's Argo Investments. And let's have a look at the chart for this company. What I could do here, share price is down. What I could do here is just compare it. In fact, I don't have to. Look at this chart. In fact, let's have a look at the weekly chart. I'd say this has underperformed the market. What you could do What I might do here is I'm going to put a line, draw a line. I'll get rid of the moving averages, get rid of all my stuff. And what I might do is I'll put the XJO, and we'll do a new price scale. And well, so if you go back to, we'll go back to 2000, last 10 years. So, and over the last 10 years, yeah, the XJO. In fact, what I should do is the STW, because that the XJO does not include dividends, but the STW, which is an ETF, does include dividends. So let's have a look. And starting at the same time, and if you put your money in the STW, you would have got better returns, and probably significant returns. In fact, if you adjust it for dividends, let's have a look. No, in fact, you got very similar returns. So again, look at the comparison of the STW here to Argo Investments. It's also almost a mirror. It's a mirror. And the reason behind that is because Argo Investments, just buys the big companies, almost buys the ASX 200. And so you're going to get very similar returns. Probably the only difference is you're paying higher fees for Argo Investments. And the STW has slightly beaten Argo Investments over the past 10 years. What about over the last 5 years? Let's have a look. Yeah, just slightly beaten Argo Investments over the last 5 years. Just slightly, but it's there. I just don't understand why any investor would put their money into this instead of an ETF. We have ETFs now. Okay, but it's worthy to have a look and try to understand the company, the fund manager. And just because I don't understand why anyone will put their money into this doesn't mean you don't have to. It's your own decisions, that sort of thing. Now on to PYC Therapeutics. This company has popped up on my radar, but I have not had a look at it. They released an RP11 clinical trial update. They also amended it for some reason. I probably should look at the amended one. It always slight concern when the company has to release an amended announcement. Sometimes it's because of spelling, or sometimes they make a small mistake. I don't even know what this company does. Let's have a look. Some sort of the clinical study, health study company. Here it is. About section. Companies should always have an about section when they release announcements. PYC Therapeutics is a clinical stage biotechnology company creating a new generation of RNA therapies to change the lives of patients with genetic diseases. The company utilizes its proprietary drug delivery platform to enhance the potency of precision medicines within the rapidly growing and commercially proven RNA therapeutic class. Targeting monogenic diseases, the indications with the highest likelihood of success in clinical development. Looks like retinitis pigmentosa type 11, a blinding eye disease of childhood affecting 1 in every 100,000 people. Okay, so we want this company to succeed in what they're doing. Of course we do. We want this company to succeed. But just because we want and hope this company succeeds doesn't mean it will. Markup cap of this company is, let's have a look. Markup of this company is, it's almost $500 million. They must have a lot of shares on issue. Almost 5 billion shares on issue. Wow. There you go. I'm assuming this company has no cash receipts. Let's have a look at their most recent Appendix 4C. And of course, it's just going to take ages to open up. And no, they're spending a lot of money. They have spent $56 million on R&D in the last year. They do get a fair bit back in government grants and tax incentives, but they just have to keep on raising capital. Raise a lot of money because they're burning through a lot of money. So that's sort of a thing about these sort of companies. Companies without any revenue or receipts, they do have to do capital raisings until they make it. And there's a possibility this company will never make it. I'm going to open up this little presentation they released on the 12th of July. And did I open up this announcement? Yeah, I actually did open up this one. Just going to have a quick look. I'm hoping they have, I haven't had a look at this. I'm hoping they have sort of, got decrease, there we go. Sort of a pipeline, how the pipeline was built around. Okay, so they do have some ambitions here. introduction to the company, talking about some of their drug candidates. So the retinitis pigmentosa type 11, RP11, which is relevant because the announcement they released today was RP11, and some of these other stuff here: autosomal dominant optic atrophy, autosomal dominant polycystic kidney disease, and Phelan-McDermid syndrome. I've heard of this one. The name is familiar, but I don't know what from. Don't know from where or why I know that syndrome. It could be from numerous things. Could be me just looking at another company. Phelan-McDermid. Okay, so currently conducting 5 clinical trials, which is probably why they're spending a lot of money. Retinitis pigmentosa type 11, early, mid, late. So MAD, trial MAD is mid. So what they might be, here we go. There is scope for this clinical pipeline to grow substantially. Okay. So this is a sort of company where I think you need to understand it's high risk. High risk. This company may never make it in the end. We all hope they do, but they may never make it. I prefer, here we go. So clinical trials, prevalence and market size, $1 billion per annum. That's for that pigmentosa type 11. 10 billion per annum for polycystic kidney disease. So that's getting towards clinical. Not sure how long they have before they might get their first revenue. It could be 5 to 10 years away. So there's a possibility what they're looking for now is partnership, because they'll keep on burning through lots of cash. And they have 5 billion shares on issue. That is another concerning thing, that they've probably done a lot of capital raisings in the past to get to this position. And I just don't know how long they have before they get to any sort of revenue or receipts. Okay, so what's this announcement in regards? Why is the share price up a little bit today? So they wish to advise that due to an upload error. Okay, that's why they had to amend the announcement. So let's get to the crux of the announcement. They're developing the only clinical stage investigational drug candidate designed for patients with a blinding eye disease, retinitis pigmentosa type 11. So today they're announcing that the visual function in a patient has further improved at 4 months of follow-up. A second patient from the same cohort has demonstrated an improvement in visual function at the same point, 4 months post-dosing. Both patients have reached a threshold that is considered to be clinically significant on this endpoint by the US FDA in the context of blinding eye diseases. And they go on and on. So it does sound pretty encouraging for the company. But again, this is the first time I've really had a look at PYC Therapeutics. Now, one of the reasons why this company popped onto my radar, I'll show you right now, I suppose. We'll go back to candles and we'll have a look. There we go. So PYC Therapeutics. Zico is fairly easy. So the only reason this company popped onto my radar was because the chart starting to look pretty good. Well, it was looking good. Share price has dipped back. Possible buy the dip situation here. Share price fell from 13.5 cents down below 10 cents. Now it's back above 10 cents. A few, I wouldn't say red flags, but shares on issue is a concern. When you have 5 billion shares or close to 5 billion shares on issue, that can be a red flag. But the share price is above 10 cents right now. But again, how many more capital raisings do they have to do before they get some cash through the door? And I'd say you have to understand the company a little bit more before you can answer that. Market's still going down 3.63%. Wow. Now that's, So that's PYC Therapeutics. First time I looked at the company. If you know this company a little bit more, love to hear your thoughts. Now, coming in number 3 is a company I used to think was one of the highest quality companies on the ASX. This was like 10 years ago. Now I don't think so. Now, Ramsay Healthcare only down 0.33%. I thought the share price might have been down a little bit more. They did an earnings update. If you know anything about me, you know I love announcements like this. However, this is not really a trading update as per se. They're just saying what their profit's going to be for financial year 24, which has already come to an end. It's not a profit upgrade, profit downgrade. It's just Ramsay Healthcare getting ahead of the release of their financial results. And there's a bit of a one-off here. No, the result. So their profit is between 884 and 889 million. So you might be thinking, ooh, so they're going to have a profit of 880 million. The market cap of the company is 10.37 billion, which means the P ratio of this company is like 12. You might be going, wow, Ramsay Healthcare has a P ratio of 12. So run out there and buy shares in this company because it's really good value. However, you got to move on. That's the problem with looking at numbers in isolation. You just see that or read that and go, buying is. But this is the most important thing, and they mentioned this right after releasing those numbers. The result will include the after-cash profit on the sale of Ramsay Sim Derby of 618 million, which means their real profit, the real profit, not the reported profit, but I suppose you call it the real profit, is between 265 and 270 million, which is significantly lower, which puts that P ratio of the company more towards 40 than 12 or something like that. And in fact, the profit has fallen from last year, which is a concern about this company, because one of the reasons why I won't consider this company as high quality anymore is this company is not a growth company anymore. It's stagnant. It's a mature company, not growing at all. You look at the revenue over the last 10 years, it's up 13.5%, but the revenue growth is slowing down. Dividend growth over the last 10 years is actually negative. If you have a look at revenue, I wonder where is it? Income. Let's have a look at revenue. So revenue is growing, but margins have been dropping. Yeah, margins have been dropping pretty consistently over the last 10 years. So revenue has been rising. Gross margins have been dropping. So if the company continues to grow their profit and then gross margins start to increase, that would be good. But this company really has done nothing over the past, 6 or 7 years. But I did consider this company to be high quality 10 years ago. And you can see that just in the chart. If you just look at the weekly chart for Ramsay Healthcare, well, the daily chart looks pretty weak, doesn't it? Share price is in a downtrend. I thought it was breaking out back in March, but no, failed. If you look at the weekly chart, share price has done nothing. Ooh, look at that. Just move this there. Share price now is at the COVID-19 lows. That could be interesting. And if the share price falls any further, the last time share price would be this low was 10 years ago, November 2014, when I thought this company was high quality. And you can just see the chart back then. It was a beautiful chart. Look at that. Beautiful. And since really 2015, share price has done nothing. Share price has absolutely done nothing for Ramsay Healthcare, and I'm not sure if that's going to change. And just the chart looks weak. The weekly chart looks weak. The daily chart looks weak. And yeah, anything else they say in this? They're just going through why, talking about impairments, write-downs, as a result of the expected impairment charges and write-downs. They're talking about then depreciation, amortization, how those write-downs are going to affect that. So a lot of counting going on here. And that's it. Yeah, so I thought it could have been a little bit worse, but I think the market expected that. So that's Ramsay Healthcare. Share price, just by the chart, could be due for a bounce. Share price has bounced off that support level, those COVID-19 lows. Yeah, it has, and it's bounced off it today. There you go. Coming in number 2, we have Viva Leisure. Or leisure. As I say in America, it's leisure. I find how they pronounce leisure to be funny, or leisure to be funny. Leisure. Completion of acquisition and trading update. Share price up 5%. So there is some good stories on the ASX today, even though the market is down 3.58%. And I'll be honest with you, this is not the sort of company I like. So they own, Viva Leisure owns gyms, I suppose. Gyms. What did they call it? Let's see what they call it. I definitely think they would have a different word for what they call it. Oh, yeah, of course. The leading and fastest growing provider of health and fitness clubs. That makes sense. Yeah, gym versus health and fitness clubs. Gym. heard a story about the originations of the word gymnasium, and I believe it came from a Greek times, and I believe it means people fighting when they're nude. Not fighting, but exercising together when they're nude. It means something like that. I don't know why that popped up, but whenever I learned that, gymnasium history, word derivation, I just remember reading that or seeing that somewhere. Yeah, here it is. The word gymnasium is derived from gymnazo, meaning exercise, and gymnos, meaning naked or loincloth. Yeah, and I believe the gymnasiums in the Greek times, they did exercise naked or something. Yeah, the naked truth about gymnasium. There it is. So that's the word for today, gymnasium. Anyway, yeah, so go to the gym. If you go to the gym, go and take all your clothes off and start working out naked. And then you'll be actually, you know, you're a truth teller. You are a person who looks at the word and say, this is what we should be doing. We should be exercising in the nude. That's what our fathers did. Well, our fathers 100 generations ago did. Anyway, so I'm going on a tangent. Viva Energy, Viva Leisure is or owns gymnasiums or health and fitness clubs, and they are quite acquisitive. One reason I don't like it, I just don't like the gymnasium business model. It's not for me, but they are acquisitive, and I suppose this is a good update because they mentioned that they're going to achieve the upper end of guidance achieved for Q4 and financial year 24 revenue. So at least they're not performing bad. And I suppose the market does like it. So it looks like they're acquiring in WA. So whatever floats your boat. That's my thinking. Whatever floats your boat. If you like gyms or gymnasiums, you think they're good investments, maybe this is the company for you. It's been around the ASX for maybe 4 years. Let's have a look at the weekly chart. I'm thinking late 2020. Oh, late 2029 or mid 2029. So it's been around a little bit longer than I thought it had. But if you look at the weekly chart, even as an investment, this has not really performed that well over the past 5 years. Daily chart, is a breakout? No. In fact, the share price moved into a downtrend not that long ago, a few weeks ago. So no interest in Viva Leisure for me, but the whole point of me doing these videos is to share ideas with you. Here's a possible idea. I don't know. It's up to you. So that's Viva Leisure, and the only reason it's coming in number 2 is because share price is up 5%. You can't complain about that, can you? Coming in number 1, we have a company whose share price is up 13%. Well, the last time I looked, it was 13%. Now it's 11.5%. Financial year 25 guidance. So screw financial year 24 guidance that Ramsay Healthcare did. Let's release financial year 25 guidance. And I suppose Spirit Technology Management have... I'm not sure if confident is the word, but they're excited about their potential in financial year 25. And they just had to get this out there. So I actually opened this up and I went, this company is quite small. Spirit Technology has a market cap. Well, it's not as small as I thought. $78 million. I'm going to keep that in mind. $78 million. They're expecting revenue of between $150 and $160 million in financial year 24, and underlying EBITDA, I'm pretty sure that's what the U means, of between 9.5 and 10.5, which means the company is trading on about 7 times EBITDA, which actually is not that exciting. It's actually, if I saw it was trading on 3 to 4 times EBITDA, I'd be like, ooh, this is really exciting. Maybe it's just the growth. Let's have a look. Financial year 24 had revenue of 125 million, so nice growth in revenue, and unaudited group underlying EBITDA about 1.6 million. Well, they say to exceed 1.6 million. So underlying EBITDA, really nice growth. They're forecasting really exceptional growth. 5 times higher their underlying EBITDA expected in financial year 25 versus financial year 24. So the company's seeing a little bit of scale. The bit of margin expansion, that sort of thing. So I can understand why portions of the market have got a little bit excited about this. They've also mentioned, following a strong finish to financial year 24, and with a growing pipeline of business opportunities, Spirit is confident. So I thought confident was maybe not the right word to use, but they've used it here. Is confident that its strategy of selling combined cybersecurity, managed services, and collaboration platforms always thought this company was just like a NBN or an internet provider. So am I wrong? Innovative, secure managed services, cybersecurity, and collaboration communication platforms. I always thought this company was an internet provider. Maybe I'm completely wrong. But anyway, they are expecting pretty good growth in financial year 25. And if they do that growth and then keep on growing, maybe the company is cheap. And the other thing I really liked about this company is their chart. Oh, the chart started to look interesting. Although a little bit of selling today, share price goes as high as 6.4, so the share price has fallen a little bit, but the chart is starting to look a little bit more interesting. If we didn't see the share price rally late last year, rallied hard, didn't see that, I'd be even a little bit more excited about Spirit Technology. If you have a look at the weekly chart, share price has fallen a fair bit from the highs back in 2020, 2021. It got as high as 44 cents. So share price has decreased about 80 to 90% since then. But just because it's done that doesn't mean there's anything significantly wrong with the company itself. It could be just the market got a little bit too excited back then, and now expectations about where they are. And the market is a little bit excited about this company today. Whether that excitement translates or continues into the next few days or the next few weeks remains to be seen. But share price is up over 10%, and you can't complain on a day like this. Okay, few charts, no comments because it's getting close to 4 p.m. I just wanted to have a look at Resmed. Resmed was really interesting because I've mentioned Resmed now about 4 times in the past week. So they released their quarterly results. Share price down. Can't believe it was down. That's a weekly chart, by the way. So let's have a look at the daily chart. Share price was down on Friday. Then share price rallied on the Friday night session in the United States because they released good results. Expansion in margins. Exactly what I wanted to see. And the share price up today, although a little bit of selling's come in. Share price was probably up about 5% at one point today. Share price did get to $34, which is a long-term high. So last time the share price of this company was $34 was actually way back in May 2023. So if you do look at the chart over the long term, it's actually looking pretty good for Resmed. And I think the pessimism and the fear about how this company is going to be destroyed by Eli Lilly and Novo Nordisk and all those diet drugs is a little bit too over the top. And I think that's an absolute. And that just shows you, this chart should show you what fear can do. It can make the market significantly overreact. And that was definitely true for Resmed back in September, October last year. Share price of this company got as low as $21. It's ridiculous. Share price has increased 50% since then, which is ridiculous for this type of company. And the other one I wanted to look at was Ethereum. In fact, I think Bitcoin has done that too. I saw the chart for the Ethereum and I was like, this is broken out. This is a breakout to the low side. This is an awful looking chart for Ethereum. Same thing with Bitcoin, starting to look really weak. It's collapsed today. Last time I looked at it wasn't down this low. So let's have a look at the 5-minute chart for Bitcoin. Yeah, it started to go lower at about midnight. And around midnight, the price of Bitcoin was 60,000 and it's gone down a lot. It's gone down $8,000 since then. Interesting times you are living in. Okay, so that's all I got for today's video. A few things I did not realize. Nikkei, down 8%. Are we expecting a bounce in United States? I don't think the futures is there just yet in trading view. Let's have a look. So no, it's not there yet. I could go to, no, I won't do that yet. So usually I'll start to see the futures sometime in the evening. I'm not sure exactly when, but you can sometimes gauge what America might do overnight just by looking at futures. If we start to see a few of these companies up by 2% or 3% in pre-market trading, that could be a good sign that there's going to be a rally on the American markets overnight. And there could be, because I'd say the NASDAQ is oversold right now. Let me just verify that. I think definitely the Nikkei is oversold. Let me just have a look at the NASDAQ. That's the 5-minute chart. I'm going to put the RSI in here. RSI. I don't really look at the RSI. Oh, I can't do that because I've got EMA here. I hate this. I use 4 indicators and you can't use 5 unless you want to upgrade. I'm not going to upgrade. RSI comes down here below. And it's not quite oversold just yet. It's getting very close to being oversold. The last time it was oversold was the bottom in April, 19th of April. It was perfect. Oversold, that was the bottom. Before that, it got very close to being oversold at the bottom in October. Say it was quite oversold back last year. Yep, oversold. But just because it's oversold doesn't mean you'll see significant bounce. It's just, I think the chances do increase. And you don't really need to look at the RSI to know if something is oversold or overbought. It's just common sense, to be honest with you. And I think the NASDAQ is getting towards being oversold. Now, that's all I've got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.